Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Dong Justin Tony. Now let's begin tonight's Tui Good Night. So, first, let's take a look at today's 2 topics. The first one is finally, it's here. Then, let's also take a look at the financial reports. We'll review the most important financial reports from last night, and we've picked out a few key ones to share with everyone. But, if the audio seems a bit unclear today, could everyone let me know? This is my first time live streaming from home, so I might need to make some adjustments. Let me check everyone's feedback. I'll switch over to YouTube to take a look. I'll check the reactions in the chat room. So, alright, so let's officially get started now. Let's just jump right in. First, let's take a look. Finally, it's here. The White House has finally announced that next Thursday, President Trump and Chinese President Xi Jinping will meet. Next week, they'll have a face-to-face meeting at the APEC Leaders Summit. The White House Press Secretary, Karine Jean-Pierre, announced this at the White House press briefing on Thursday. Now, let's take a look regarding this meeting. Actually, analysts at Bloomberg have weighed in. They still believe that it's not easy to reach an agreement here because they pointed out something highlighted in blue below. This is very important. The agreements Trump pursues are often more about substance than form, but China's national leaders, on the other hand, are more rigid. They're pretty old-fashioned and insist on having substantial content before they even suggest or agree to meet and talk. So, regarding this meeting, most analysts believe that we shouldn't set our expectations too high. But the problem is, the market is actually very hopeful about it. So, the main point is that Trump wants China to loosen its control over rare earths. But if the US doesn't make significant concessions, it's unlikely that China will back down. So, it's possible that this meeting will only result in a general direction. It might just be a negotiation where the outcome is about which direction to take, rather than giving you a definite endpoint right now. Also, as we've mentioned before, according to Chinese custom, the schedules of the country's top leaders, the president and the premier, are usually announced about a month or a week in advance. And yesterday, we saw that today, it was officially announced that from November 30th to November 1st, Xi Jinping will go to South Korea to attend APEC, and then make a state visit to South Korea. A state visit is considered a high-level event. I believe that for Lee Jae-myung, you can't exactly call it a success. Whether it will be successful or not, we don't know yet, but it will definitely be a major recent achievement for him. As for other news, Chinese Premier Li Qiang will visit Singapore on the 25th and 26th, and then on the 27th and 28th, he will attend the ASEAN Summit and the East Asia Summit in Kuala Lumpur, Malaysia, as well as the APEC Summit. So, in other words, Li Qiang will be going to these ASEAN-related meetings. Now, let's talk about another thing everyone is focusing on, which is the meeting between He Lifeng and Bezant. It seems that He Lifeng he should have already set off, and that's because of the United States. It's only about 5 to 6 hours from China, but if you're coming from the US, you have to add another 2 days. So, the US side probably has to leave earlier and will still arrive later. So, in theory, they should be meeting in Malaysia tomorrow to start talks. So this counts as good news. Of course, we've already talked about a lot of the little stories on this side. Alright, so I'll talk about this in a bit. If they're going to meet, we hope there will be a good outcome. For us, in the financial markets, we want to see a positive result. We're not a political program. We don't want to see tensions escalate and cause even more volatility in the markets. Let me reiterate our position regarding the Trump-Xi meeting. From the perspective of the financial markets, we always hope for a positive outcome, not a negative one. Because if the outcome leads to turmoil in the financial markets, it's actually not favorable for our investments. So that's basically our stance, just to let everyone know. On another note, we've finally been waiting for something. Economic data is starting to come out. Otherwise, from Monday to Wednesday, there was no economic data at all, and people have been criticizing us, saying this is turning into a political commentary channel. But that's okay. Let's take a look. Yesterday, the sales of existing homes grew by 1.5%. That's for the monthly figure. And the annualized rate is about 4.06 million units. Previously, it was 4 million units, and the market had expected 4.06 million. So the result came out exactly as expected, 4.06 million. This basically matches expectations. So what's the most important thing here? Actually, the first thing is that you can see the traditional driver for the housing market to go up is a drop in interest rates. This time, we can see that pretty clearly. When U.S. Treasury yields go down, mortgage rates also drop. As mortgage rates fall, we can see this effect. The transaction volume has also gone up, but we need to pay attention to this. In September, the median existing home price across the U.S. increased by 2.1% year-over-year to $415,200. Let me tell you, a few years ago when I was looking at this number, it was still between $300,000 and $350,000, but now it's risen to $415,000. So, with interest rates still above 4%, I have to say that mortgage affordability is still relatively high. This is something we need to report to everyone. A rate cut does indeed have a positive impact on the housing market. This is a clear positive relationship we've observed here, and the traditional correlation still holds. In addition to that, the chief economist of NAR, which is the National Association of Realtors in the US, also mentioned what I just talked about. That is, falling mortgage rates are driving home sales. But we also need to note that the inventory of homes for sale is starting to rise. So we should point that out as well. Previously, when ultra-low interest rates were first introduced, the housing market capacity was just being released, but now it might not be so easy to see that anymore. As for this part, it will maintain a relatively reasonable housing market environment, which I think is a pretty good performance. Also, to add a bit more, on the left side here, the red text highlights that the organization releasing the existing home sales data is the National Association of Realtors in the US. You can think of it as similar to an association formed by real estate brokers in Taiwan who compile these statistics. After all, existing home sales are actually handled by these agents. They are the ones who complete the sales, which makes sense. But the issue is, when we look at new home sales and building permits, the organization releasing this data is the U.S. Census Bureau. Since this is a government agency, the U.S. Census Bureau, even though it's called the Census Bureau, it doesn't just survey the population. Actually, it collects a lot of different data. But since this is a government agency, when the federal government shuts down, well, this happens. So, it's expected that new home sales and building permits will be delayed. To sum up, or to give a brief summary, the situation with existing homes is still easier to observe. The traditional positive cycle of falling interest rates leading to increased sales is still ongoing. Also, yesterday, the Kansas City Fed Manufacturing Index was released, and it has risen for 4 consecutive months, which is quite encouraging. So why is that? Because previously, the New York and Philadelphia Fed indices were released. The New York index showed a better situation, jumping from minus 8.7 to 10.7. So the overall increase was 19.4. But the problem is, in Philadelphia, it previously was 23.2 but dropped to negative 12.8, a drop of 36 points. At least, though, in Kansas, we saw that the numbers for this month were good. So actually, we can see that facing the cost increases caused by tariffs, I think the manufacturing industry is still working hard to adapt. There are still some good news coming out. It's not all bad news. And then, of course, there's another thing, the main event tonight, which is the CPI numbers. Let me add one more thing. First, the CPI numbers should be moderate, and this moderation should be enough for the Fed to cut rates by a quarter point at the FOMC meeting at the end of October. It's also expected that the market will see another rate cut in December. So, for this year, it seems like the probability is pretty high, which has always been my view. As for the federal funds rate, that is, the Fed's benchmark rate before it gets close to about 3.25, which is roughly the same as the inflation rate, this is still considered a safe zone, or what we call the neutral zone. It's like the shallow water zone, where you can feel your way across the river by touching the stones. But once you get close to the interest rate level, that's considered the deep water zone. At that point, making decisions about whether to cut rates becomes much more difficult. However, by then, the Fed chair probably won't be Powell anymore, so that will be the next chair's responsibility. Also, let me add a bit more. The quality of the CBPA report in September should be fine. Why? Because during the survey period in September, most of the federal government hadn't shut down yet. But for the October report, that's not necessarily the case, because the time window for the October report is less than a week. That means the federal government, or rather the relevant government agencies, were still working as usual. But the reliability and reference value of the October report are highly questionable, because if you use internal estimates or model-based calculations, there's a risk of later revisions. So the pressure is quite high. Also, I want to add something else, which is when there are no CPI or employment report figures available, they usually look at some state-level agencies, because when the federal government shuts down, the state governments don't. So some state agencies still have some numbers to refer to. Overall, what we can gather is that the employment numbers, the unemployment rate is slowly rising. The increase isn't big, it's just a mild upward trend. Also, tonight, the preliminary S&P manufacturing, services, and composite PMI figures will be released, so we should talk about that as well. Traditionally, Americans tend to pay more attention to the ISM. Of course, ISM is a private survey organization, so it isn't affected by government shutdowns. But the problem now is that there's too little data available, so the S&P numbers might become relatively more important. So what are we looking for? What do we hope to see? Not demanding, but hoping to see. If there is an impact from a government shutdown or trade conflicts, we hope to see only a mild decline, not a sharp drop. This is helpful for the continued performance of the stock market. Now, regarding the University of Michigan Consumer Sentiment Index, its final value might be revised downward due to the uncertain environment, especially since most of the respondents are workers. Their concerns about income prospects and overall unemployment are relatively high. However, to put things in perspective, this should be the median value, so as long as the median value and the preliminary value don't show a significant downward revision, I think the market can tolerate it. But if it's just a slight downward revision of 0.1 or 0.2%, the market probably won't care that much. But if it's revised down by 1 or 2 full percentage points, then the pressure could be a lot greater. Okay, so let's take a look at this part. Let's do a quick summary here. If Trump and Xi Jinping can meet, we really hope for a good outcome. Even if it's just a phased commitment, that's still better than no commitment at all for both sides. But if things turn sour, that's especially bad for the entire financial market. And let me say it again, we're mainly focused on stock market investments, so we hope the market moves in a more peaceful direction. Maybe if you're a more unconventional investor, you might actually want bigger market swings. Also, the CPI data is finally about to be released, and the expectation is that it will be moderate. So after tonight's numbers come out, we should see the Fed's rate cut expectations become more solid. What's important is that when the data is released, the Fed should have a stance. Most likely, they'll cut rates step by step until the end of the year. Also, hopefully the S&P doesn't take a big hit. And then this, as for the Consumer Confidence Index, there shouldn't be any big surprises. Also, the CPI will be released at 8:30, so we should have a chance to see that number in real time. All right, so let's look at a few more news items. Trump pardoned Binance founder Zhao Changpeng, who was previously fined and sentenced for anti-money laundering violations. He pardoned him. So it seems like Trump is really looking out for the crypto community. And then, also, another thing is that Wall Street profits have skyrocketed, so annual bonuses will be better this year. Of course, most of these people live in New York, so New York's finances will benefit and have more revenue as well. Okay, and then Trump also mentioned there was originally some news saying that they were considering getting into investing in the quantum computing industry, right? Looking at how good China's quantum computing is. But the thing is, this is just something a few top government officials are talking about, like someone named Jiani. But the market has already reacted, so all the related stock prices have surged. But we have to say that this is still just in the research phase, and no action has been taken yet. Also, the Trump team has warned that a government shutdown could lead to more flight delays. All right, and the US and Iran yesterday they released a report saying that it's possible the Fed will end quantitative tightening as early as the end of October instead of December. Because there's a certain number, according to the data, right now it's around 3 trillion, and they hope to bring it down to about 2.7 trillion before stopping the balance sheet reduction. But the issue is that, looking at the recent repo market, interest rates have been relatively high these past few days, so it's possible they might stop sooner. Actually, whether they stop at 3 trillion or even lower, it's all good news. Why? Because it means that if the Fed wants to do QE in the future, they'll already have plenty of ammunition ready to go. On another note, Trump said he wants to immediately end all trade negotiations with Canada. because he claims Canada used a Reagan-era anti-tariff ad, which he says is misleading. So, for that reason, he decided to stop the talks. We'll see what happens next. Also, Canadian Prime Minister Carney is going to attend APEC. He also mentioned that he wants to talk with Xi Jinping to ease trade tensions. Another key point is to reduce China's dependence on the U.S. economy. From the news above, it seems that the outlook between the two countries isn't good, especially when we look at it closely. And regarding Stellantis, you can think of it as the parent company of Chrysler. Chrysler is the third largest car manufacturer in the U.S. As for GM, I'm not sure if it's the second or the first largest, but anyway, it's always competing with Ford for the top spot. So the production scale in this area has been reduced, which means there has been a cutback. This allows them to import to Canada with a tariff exemption as part of the arrangement. This is what's called an escalation. So it looks like the situation between the US and Canada isn't very good. On another note, over in the EU, Macron has said that if Beijing imposes controls on key raw materials, meaning rare earths, and if there's no solution, he wants to use the strongest possible trade tools to deal with China. But honestly, let me tell you, when it comes to Macron, I still feel pretty put off by him. He's really just all talk, so we basically just listen and move on. Then, China has warned the UK government not to politicize commercial agreements. Also, as for Putin, he was basically sanctioned again yesterday, but he said that the US's progress on crude oil will only damage US-Russia relations and won't affect Russia's economy. He also specifically pointed out that because Russia's crude oil supply is reduced, market prices will go up. So, there's some new news coming out. The first related news is that India might sometimes buy less Russian oil. Actually, if India wants to cooperate with the US to reach a trade agreement, one of the conditions will definitely be to buy less Russian oil. But there's another piece of news today. Some Chinese oil traders believe that after the US sanctions on Russia, the risks are higher, so they will reduce their purchases of Russian crude oil shipped by sea. That is, they plan to reduce oil transported by tanker. But you have to remember, there are pipelines between China and Russia, both for crude oil and natural gas. If things really go on like this for Russia, the simplest solution is to keep building more pipelines, whether for natural gas or crude oil, the more, the better. And in that case, you really can't monitor or control it, so there's nothing you can do about it. What else is there to say? Well, moving on. Japan's Minister of Economy, Trade and Industry, Nishimura Yasutoshi, said that he is concerned about China's rare earth export controls. I'll mention his name in a moment. You should be pretty familiar with it. He used to be Japan's chief negotiator in cabinet-level talks with the US, and now he's become a big shot. Anyway, he made a statement, but I think it won't have much impact. Now, moving on, let's take a look at the earnings reports, which are more important. Today, we'll spend a bit more time talking about earnings. And here, there's some huge good news. Looking at Intel's earnings report, the expected revenue was $13,152 million, but the actual revenue came in at $13,653 million. As for GAAP EPS, originally it was expected to be negative 0.207, but it actually turned out to be profitable at 0.900. Of course, this is mainly due to the recovery in the personal PC market, which has driven an optimistic outlook for overall revenue. This looks like things are going really well, and the financial report they released after hours for the fourth quarter also projects between 12.8 and 13.8 billion. Since they're planning to spin off a computing division, these numbers reflect that adjustment. The numbers they released have already excluded that small division, but the market hasn't made that adjustment yet, so it seems like the market, if you look at the data, the market's estimated value is higher than this, but in reality, it's actually roughly in line with expectations or even slightly better than expected. So this counts as positive news, and then now it looks like Intel's new CEO, Chun Liwu, seems to be much more capable than the previous one, Gelsinger. Let me tell you, Gelsinger was good with the PC side of things, but Chun is Chinese, whether you're a Taiwanese Chinese, Chinese from China, or Malaysian Chinese. It just seems like he's more capable than foreigners, so let's take a look at this side of things. He has managed to stabilize things at the initial stage, but of course the market is still watching to see whether he can actually turn losses into profits from now on, and even generate surplus. But from his side, looking at it, the demand growth rate is at 100,000, and the recovery is steady, expected to continue all the way through 2026. Now, from our perspective, among their three departments, the most important factor is that the rebound in the PC market is the main reason for turning losses into profits. Also, their contract manufacturing losses have decreased. And there's one more thing he mentioned. The upgrade of their CPUs, especially for data centers, should be a key factor in the future. I think these three directions are indeed accurate, especially when it comes to the data center segment, which is very important. They've already partnered with AMD and NVIDIA, especially with NVIDIA in this area. If it's on this side, at least the specs won't be wrong. Well, as long as you have one, there's a chance to keep up with the mainstream. So from this perspective, things look pretty positive. Now we're looking at it more optimistically. If Intel does a good job, that's even better news for Taiwan. As long as they do well and TSMC doesn't have to bail them out, that's a win for Taiwan. Among the not-so-great news, this actually counts as relatively good news. Next, let's look at the second item, Ford Motor Company. In this case, their revenue actually beat expectations, which is quite similar to GM, and their profit margin is actually better. The main reason is that sales of pickups and SUVs are relatively strong. Better than expected. Pickups and SUVs compared to sedans are generally higher priced, so this is a positive factor. Also, as mentioned before, there was a fire at an American aluminum manufacturer called Novelis. I want to give everyone an update on this fire. Originally, it was said that production would resume early next year. They might be able to resume operations, and now it looks like there's a possibility they could restart by the end of this year. Additionally, in response to this situation, Ford's approach is to increase the production and sales volume of their pickup trucks. They have stated that the design of their pickups uses a relatively small amount of aluminum, so this particular segment is less affected by the sudden aluminum shortage caused by the fire. Break time equals 0.5s/. Actually, pickups like the Ford F-150, whether it's the small or large pickup, are their main sales models. So I think this is also a positive thing. In addition, tariffs also have an impact, but the main point, I think, is still what was mentioned earlier. In the third quarter, the tariffs in 2025 will probably result in a loss of about $1 billion, and they've already absorbed $1.7 billion. But it seems he mentioned there's a retroactive effect, so if there are additional tariffs later, it sounds like they can be reversed or offset. So this particular part of the report is relatively better overall, but after regular business hours, there is a bigger and more significant issue. The company has revised their profit outlook before tax, which is essentially the operating profit forecast. Previously, this forecast was in the range of $65 to $70 billion, but now it has been adjusted downward to a new range of $60 to $70 billion. So the lower end of the forecast has moved down. This is a bit more cautious and conservative, so that's essentially what we are seeing here in this situation. Break time equals 0.5s/. Actually, at one point it was up more than 5%, but because they adjusted their profit expectations, it ended up a bit weaker, around 2.6%. Now, Newmont, why mention them? Because they're a gold mining company. As you know, people have been asking about gold prices recently, and of course we pay attention to that here too. People are especially interested in these gold mining companies. If you look at their revenue and expected revenue as well as EPS, they're all really good. That's because gold prices have been rising, and they've managed to control costs. Their revenue and earnings for the third quarter are both quite good. They believe that their ability to control profits, well, actually, it's about controlling costs. This will be further reflected going forward. It will be further reflected in the 2026 guidance. So why do I say this? Because even though his company is a gold mining company, the cost of mining is very important to him. Although he has some low-priced inventory, and now prices are better, which is obviously favorable for him, people are still more focused on mining costs. Also, we saw that after hours, the stock dropped about 4.75%. Why? Because it was found that their gold production in the third quarter decreased by 15%. So that's the issue here. This is relatively negative, and it could be related to his cost control measures. Because cost control is stricter, workers may be less willing or have fewer opportunities to work overtime, which leads to a lower amount of gold being mined. And there's one more thing. Recently, gold prices have been quite volatile. The market, well, it's not exactly sleepless, but everyone is watching the gold price closely and watching how the stock prices of smaller gold companies change along with it. So that's another factor here. That particular stock dropped quite a lot. Sorry, this page doesn't have 3 stocks listed. Now let's take a look. These are basically the three stocks for today. Let's look again. Yesterday, a few important announcements were made, and I want to highlight one in particular, Dow or Dow Chemical. The reason is that it actually had a very strong increase because its industrial division's performance bounced back. So, for the third quarter, it turned losses into profits, and its stock price surged by 12.95%. And then there's Wrapper, this tech software company. Actually, their revenue wasn't good, but their earnings were okay. However, the key point is that their earnings forecast for the fourth quarter fell short of expectations. So the stock dropped quite a bit yesterday, down 5.7%. Molina is in pretty bad shape because the costs for their ACA, the Affordable Care Act plan, have risen sharply. So this is the third time this year they've had to make such an adjustment, which is really bad. It's kind of similar to what happened before with Buffett's investment in UNH, where they miscalculated insurance costs and ended up with losses. That same feeling is coming up again. Its performance was relatively weak, dropping by 17.49%. More importantly, I also checked to see if this had affected other healthcare stocks. Of course, it did, but the impact was much smaller. That includes United Health, HCA, and also Humana. These are some of the bigger health insurance companies. Looking at it, the declines for these companies are still within an acceptable range. So the spillover effect here might be relatively limited, which is good news. There's also Honeywell, which is more of an industrial stock. Here, they've raised their financial forecast, but the biggest boost comes from the fact that their aerospace business will soon be spun off, which will bring in investment gains. So the market is looking forward to this, and the stock went up by 6.18%. Also, there's Hospira, which is doing well because they sell baby products. They mentioned that their holiday season orders have accelerated in growth, so they've raised their full-year outlook. As a result, their stock went up by 3.7%. This is a very different performance compared to the doll company Mattel. All right, and then T-Mobile was a bit weaker. Their revenue fell short of expectations, but their user growth was still there. However, even their user growth didn't meet expectations. So that's the situation. The market was still somewhat disappointed, so the stock dropped by 3.26%. Next, American Airlines. Quarter 3 earnings were slightly below expectations, but they raised their guidance for the coming quarters. They turned from a loss to a profit, although they still had a loss in the third quarter. In the fourth quarter, they're expected to turn profitable. This drove the stock price to react quite strongly, rising by 5.262. All right, another thing we're paying attention to is two other companies, specifically the auto parts retailer O'Reilly. Their earnings were pretty good, but the problem is their outlook for the auto market is rather conservative, so the stock dropped by 2.9%. Then there's First Brands, that company that previously went bankrupt. That company was their supplier, meaning they sold to them. This was mentioned here, but I don't think the impact is significant because if you don't supply, naturally someone else will step in to fill the gap. So, in this regard, I think the main point is that it reflects their rather conservative outlook on the automotive market, which is declining. O'Reilly is actually a pretty big company in this sector, so it could potentially impact the future performance of auto parts. On another note, Southwest Airlines, both their revenue and earnings beat expectations. If you look at their actual earnings, if you look at the forecast, it was basically 0.001, which means they weren't really expected to make any money, but in the end, they actually made a small profit. However, the issue is that the market had some concerns about the details of their cost-cutting measures. There were doubts, mainly focused on their fuel cost projections, which is why the stock dropped more, down 6.25%. As for after-hours trading, the ones we pay more attention to are the next three, which I'll introduce to everyone. This next tracker is a solar technology company. According to their profile, they can adjust the angle of solar panels to track sunlight, which improves power generation efficiency. But it went up a lot yesterday. After hours, it surged by 12.75%. The main reason is that in Saudi Arabia, it looks like they have a major project underway. So their financial report was good, and people saw that there's a big project coming up. Because of this, solar technology can help increase power generation efficiency. So where is there the most solar energy? Of course, it's not Taiwan, it's definitely the Middle East all desert. No matter how much you build, no one's going to protest, and there aren't any soil or water conservation issues either. So that's why it shot up by 12.75%. Now, there's another comparison. Take a look at Sallie Mae. Their revenue and earnings didn't quite meet expectations, but there was still some growth, so overall, they performed relatively well. Now, this is a student loan company, but I'm not really a fan of their growth because it means student loans are increasing, which means more students are taking on debt. Honestly, that's not really yeah, it is a good business, but it's not really the kind of business I like, so just take that as a reference. Also, there aren't too many important ones tonight, just a few, because usually the main earnings reports come out in quarter 2, quarter 3, and quarter 4. Those are the key ones, especially on Wednesday and Thursday. And as for Friday, most of the reports are released before the market opens. It's very rare for companies to announce their earnings after the market closes on Friday. The main ones to watch are Procter & Gamble, the big household goods company, General Dynamics, the defense stock, Baker Hughes, the uranium mining services provider, and HCA Healthcare. Along with Alaska Airlines, these are basically the main earnings reports that are important today. The US dollar index had a slight increase yesterday and continues to rebound today. US Treasury yields saw a significant rise yesterday, mainly because oil prices went up, which raised concerns about inflation. However, I think if today's inflation data turns out to be relatively mild, this rebound might end up being rather weak. As for Brent crude oil, I basically talked about it yesterday. The surge in oil prices was mainly due to sanctions on Russia. On Friday, prices edged up slightly, but the market is still in a wait-and-see mode. As for gold, before the CPI was released, it had a slight increase, up 0.68%. But the problem is, it dropped sharply again on Friday, so be a bit cautious. If it falls below this level, if it falls below the 21-day moving average, it could mean a reversion to the mean. There's still a chance it could continue. Right now, it's just pulled back from the high to the 20-day moving average. If it needs to correct further, there might still be some room and time below the 20-day moving average for it to fill in. So I want to remind everyone about that. As for Bitcoin, it was rebounding yesterday, and it looks like the 200-day moving average is providing support, which is around $109,590 to $109,600. It seems like the sentiment for Bitcoin is improving, and maybe this is related to. It seems that the boost in market confidence brought by Trump is related to this improvement. Now, let's look at the performance of several other indices. Yesterday, the tension in US-China trade relations first escalated and then eased, and major companies continued to release their earnings reports. Everyone is still digesting these reports, and tech stocks performed relatively well, so overall the market went up. But looking at it here, it seems that there's still a need. They haven't fully pulled back into an upward trend yet. The uptrend hasn't completely returned. The S&P is showing a similar situation as well. Volatility dropped down to 17.3, and there's still room for it to go lower. Yesterday, Dow Chemical went up a lot, and Sands also saw a big increase. Occidental Pharmaceuticals also extended its gains. As for this pharmaceutical stock, we haven't really had a chance to introduce it to everyone. And leading the decline, of course, is Molina Healthcare, mainly due to cost issues. So overall, they made layoffs like this, which is really bad, so it dropped 17.119%. Then SMCI was given guidance. Oh, it seems like previously they said they had some new technology, but later it turned out that their shipment numbers weren't very good, so it dropped again. United Rentals fell 7.9%. Southwest Airlines was relatively weak, and then this wrapper tech stock. Recognized tech stocks are relatively weak, and the equal weighted side is pretty much in line with the performance of the Dow Jones, pretty close. So that's about the same. Now, let's take a look over here. The semiconductors surged about 2.54%. The top gainer was Credo, which rose more than 10%. As for Rambus, that was around the year 2000 during the tech crash. At that time, it should have been when Intel was clearing out inventory, right? So it went up 7.58%, and then Synaptics rose 6.93%. So actually, you can see that the top three all went up to 6.93. That means yesterday was really strong, right? Only one company went down, which was on semiconductor. The key point is that yesterday there was a big red candlestick, but we still need another big red candlestick. Will that happen today? Because of that big red candlestick yesterday. You can all see that there's a rebound after breaking below the 20-day moving average. But to confirm a successful rebound today, we need to see another solid red candlestick. It doesn't necessarily have to break through the 7,000 point mark. But the key is that only a strong enough red candlestick can stabilize things and hold it down so that the ongoing upward trend can be stabilized. So today, we're still really hoping to see a solid and impressive red candlestick from the Philadelphia Semiconductor Index. The Magnificent Seven stocks also went up yesterday. From the perspective of these seven giants, there's a pretty high chance that the market will perform well today. Why do I say that? Because looking at yesterday, all of them were up. At the very least, Microsoft was flat, but the rest all saw gains. So, Tesla's earnings report came out and the stock rose quite a bit. But as we've mentioned to everyone, we're not really fans of the details in that report. It did pull out a very long red candlestick. But the key point is, even with this big red candle, it still hasn't broken out of its sideways trading pattern. If it wants to break out of the sideways pattern, it needs to keep moving up and actually break through the high point of that big black candlestick from early October. Only then would it be a real breakout. But I think it still needs some time to consolidate here. I don't think it's ready just yet. Can't just go up that quickly. So, to answer about Amazon's recent rise, the upward movement has been pretty volatile overall, and it's the same situation with Google. Well, Facebook hasn't changed much. As for Microsoft, I think next, let's take a look at today's futures. Looking at the pre-market around 6 or 7 o'clock, the performance seems pretty good. Besides that, let's also check out how the local market is doing, even though today is a holiday. But we can still be optimistic as usual. First, let's take a look. Hey, the Nasdaq only went up almost 1%, and then the S&P 500 rose nearly 0.7%, and the Dow Jones was up 1.5%. It looks like tech stocks are doing well today. In the pre-market, the performance seems pretty consistent. Also, let's take a look at the S&P 500's pre-market gainers. Hey, hold on a second. Let's wait a bit. My computer is loading. Okay, for the gainers, Intel is up 6%, which is great. I really hope it keeps going. Seriously, if Intel can turn things around and become profitable on its own, that would be huge news for Taiwan. Don't bail them out. This would actually be the biggest blessing for TSMC. As for HCA over here, it looks like their situation is much better than Molina's. They're both healthcare stocks, but you can see HCA is performing really well. Their earnings report seems solid. Ford is also doing well, and the market is pretty positive about P&G. Then there's Coinbase. Dell gains today are still good. In the next few days, especially looking to next week, that's going to be important. For everyone, next week, the Magnificent Seven earnings reports come out, mostly on the 30th and 31st. Those 2 days will be packed. There's also another one. There should be one more company announcing a bit earlier, and for the rest, you can refer to the file I shared on Monday. Actually, the big tech companies will probably lead the market's performance next week. Now, before the Magnificent Seven, I think today, aside from individual company earnings, there's also the CPI data, and over the weekend, of course, there will be content from the Jackson Hole meeting. So, in theory, all of these should be relatively positive data and create a favorable environment for the market's performance. At this point, we should be able to see a breakout. We should see a continuation of the uptrend with a strong bullish candlestick, which would be the normal expectation. Now, let's also take a look at the weaker ones. Of course, DEC is not doing so well, and Newmont isn't doing well either, which is pretty much already known. Mohawk isn't doing well either. This one's a traditional industry stock, so just take note of that. Then there's Illinois Toolworks, which also isn't performing well. As you can see, the ones that weren't doing well before are still not doing well today. But actually, it's not too bad. Its pre-market drop is relatively small. However, what you need to pay attention to is its market. There's a possibility that after the main market opens, there could be some catch-up declines. These large healthcare stocks might only start dropping after the main market opens or during regular trading hours. Why is that? Because the main holders of these healthcare stocks aren't individual investors. Because there's not much momentum, the ones buying in larger amounts are probably mostly institutional investors. So, they might wait until after the market opens to start selling. As for Tesla, it still looks a bit weak. Looking at the others, actually, the declines today aren't that big, so it's more likely just reflecting the performance of the futures market. That means there's a chance for a good performance today. Also, as we promised everyone, let's take a look. The CPI data, which hasn't been released in a long time, let's take a look at it. Month over month is 0.3, core is 0.2, okay, 3.0, 3.3, so does this match our expectations? Basically, it's showing a relatively mild increase, just as we anticipated. So this should be a relatively mild result. As we mentioned before, I think the key point is The Fed should have no problem cutting rates at the end of the month. All right, now let's take a look at everyone's questions. All right, let's take a look. Just to let everyone know, hope you're all doing well. I'm really glad to see everyone and have a chat today. It's been raining nonstop in Keelung. It's pretty crazy. And about gold at 6,000, let me tell you, first of all, what is the underlying aspect of gold? The flip side of gold is actually confidence in the United States. So I get what you mean. You want to know how high it could go. And you see how chaotic things get when Trump is involved. Now, let me say this. I really hope he doesn't mess things up, but his personality just naturally stirs up trouble. So everyone needs to pay attention to that. So as for whether it will reach 6,000, I'm actually not too worried about that. What I'm more concerned about right now is the 4,000 level, whether it might revert to the mean before it shows any performance. And by reverting to the mean, I mean whether it will go back to the 50-day moving average, the 20-day moving average, the 50-day, or even the 100-day moving average. Let me put it this way, so I'm telling you, it's still possible for it to reach 6,000. It might first plunge down to around 3,000, maybe even break below 3,000, and then pull back up. Is that impossible for commodities in the futures market? And I especially want to emphasize again, so it's not that I'm bearish on it. I just want to tell you that its volatility could be very high. Let me repeat, it's not that I'm bearish on gold. I just want to tell you that when it gets to this level, you have to look at it using trading strategies, and its volatility will be relatively high. If you earlier on, I mentioned this before at the beginning of last year, if you wait until something surges and then chase after it, that's not hedging anymore. That's called chasing the rally, that's called speculation, okay? The idea is still the same. So let's take a look. When it comes to gold, we don't need to talk about specific price levels here. I'm just reminding everyone about the risk, and in the short term, there's a chance it could pull back. As for how gold will perform later on, it all depends on your confidence in the US government. The weaker the confidence, the more likely gold is to go up. If gold performs well at this time, it also means that the market is probably hoping for a better outcome in the US-China trade war. Now, let's see if there are any new questions. If there aren't any new questions, then that's about it for today. That's it for tonight. We'll see you next week. All right, bye-bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.